FTX, the fourth largest crypto exchange in the world, may be headed to bankruptcy. This is terrible news for those who have directly invested with FTX, but also for anyone who has invested and is interested in crypto. So it's important to know what happened, how did we get here, and the impact of these events on the crypto market as such and your investments. And at the end of this video, I'll explain how we can be better prepared against such events in the future. So let's get started. FTX is owned by Sam Bankman-Fried, or in short SBF, and has its native token FTT. Now, FTX has a sister company called Alameda Research. It's a trading firm and a liquidity provider for FTX. Let's call them AR. These are supposed to be separate entities, but on the ground, SBF, FTT, and Alameda Research are one and the same. Now, the trouble started on November 2nd when a leaked balance sheet of AR showed that the company owned a significant amount of FTT tokens, around $8 billion of its $14.6 billion reserve. Now, this is not directly a concern, but it starts to become one because AR has been taking credits worth billions, keeping its reserve, which is mostly FTT, as a collateral. Now, the total market cap of FTT before the crash was only $2.8 billion. So even if Alameda Research liquidates all its FTT holdings, it won't come anywhere near to the value it claimed on its balance sheet as the reserve. And if this were the case, a fall in FTT's value could damage both AR and FTX given the shared ownership. On November 6th, AR CEO tweets that the leaked balance sheet doesn't show the entire story and they have additional $10 billion of assets that are enlisted. Now Binance joins the party. Binance is the world's largest crypto exchange and is owned by Changpeng Zhao, or in short CC, and is a direct competitor of FTX. On November 6, CCU tweets that his exchange will sell off its entire FTT holdings in the wake of the recent revelations. And this is a direct concern for FTT since such a sell-off will drop its value by a huge margin. Within minutes of CC's tweet, AR CEO offers to buy all the FTT tokens held by Binance at a rate of $22 each. But this confirmed the speculation that AR and indirectly FTX is in some kind of trouble. So users start to withdraw the funds from FTX. Now FTX CEO downplays the whole episode, citing that Binance is trying to go after them with false rumors and everything is well and good with FTX. Now Binance rejects the offer from AR to buy the tokens and instead decides to sell them in the free market. This causes more panic and the value of FTT drops 30% within a matter of hours. Now this is where things take an interesting turn. After tweeting that everything is fine with FTX, now SBF admits of a liquidity crunch and that there is a non-binding letter of intent by Binance to acquire FTX. But things took another sharp turn on November 9th when Binance backed out of the acquisition after taking a look into the FTX books. For them, the issues at FTX were beyond their control or ability to help. That was the final nail in the coffin. Now the price of FTT drops by 80% from $20 a token to $3 a token. FTX halts all customer withdrawals from his platform. SBF tweets that he is sorry and that he messed up. How did this happen? This is a classical case of an infinite money glitch, where billions or trillions are created out of thin air. Here is how it works. Suppose you have $1,000 and you deposit it in the bank. The bank keeps 10% in reserve and lends out the remaining $900 as a loan to other people or companies with interest. Suppose the person who took the loan used that $900 to buy a bicycle. The shop owner has an account in the same bank, so he deposits the $900 back into the bank. Again, the bank keeps 10% of it as a reserve and lends out the remaining $810. Now we started with just $1,000, but the money in circulation now is $1,710. This can go on in loops with imaginary money, creating an infinite money glitch. Now if you and other depositors go to the bank to get back your money, the bank wouldn't have enough funds to pay everyone back. In the traditional banking system, there are deposit protections and insurances to avoid such a crisis. Now let's compare this to our current situation. FTX first releases a hypothetical token called FTT, which ideally has zero value. Then they create some use cases for this token to give it an artificial value. After that, they send these tokens to the sister company Alameda Research at lower prices. Also, they buy and hold a major share of the same token from the market and burn a part of it, reducing the supply and creating demand for the remaining tokens, thereby increasing the value. Now, when FTX artificially inflates the value of FTT, Alameda can use FTT as collateral to borrow other assets. Also, there were speculations that even user funds on FTX were finding their way to Alameda as collateral to FTT. And this goes in a loop, essentially printing more and more money so that FTX could lend user funds to itself, creating the same infinite money glitch we talked about. Now this goes on until something bad happens and the value of FTT tokens drop. Now users will come back asking for their funds, and FTX doesn't have enough means to pay all of them back, since most of the reserves are in FTT, which doesn't have much value now. And the lack of any insurance or deposit protection in the crypto sector makes things worse for the investors. Now what is going to happen? The most probable scenario is FTX declaring bankruptcy until someone else is willing to come to the rescue. But by the looks of it and how much deep down debt FTX is in, this isn't a likely scenario. Should FTX declare bankruptcy, the user deposits will remain in limbo. This could even go worse and have a catastrophic financial impact on the whole industry, given the number of big institutions that have invested their money into the FTX platform. FTX was one of the leading players and a trusted one. SBF even had the reputation among regulators as one of the good guys in the crypto space. This could break the trust in the industry, calling for aggressive regulations on exchanges, specifically more transparency on how the user funds are stored and saved, which could be a good thing for the crypto. What are the lessons we can take from this, and how can we prepare against such events in the future? The FTX story is a classic case of yet another centralized crypto platform going under due to mismanagement, greed, and incompetence. This was the exact same thing that Satoshi wanted to bring to an end when he published the Bitcoin white paper on the October of 2008. I am still optimistic on the future of crypto. The technology is still solid, the blocks are still being created on the blockchain, and great projects are being built. What's now happening is the market cleansing itself of the bad actors, and this process could take some time. Until then, don't invest more money into crypto than you are ready to lose. The most important lesson that we can take from all this is that nothing is too big to fail. We can't completely trust the exchanges to keep your tokens or your money safe. If not your case, then it's not your crypto. If you have significant number of tokens on a centralized exchange, then get a personal wallet and move your assets immediately. You can check these videos to learn how to set up a Ledger Nano X and move crypto from the exchange to your hardware wallet. Until I see you again, take care of yourself and stay safe.